Alright guys, back with another video. So this one is going to be a pre-recorded one. I wanted to react to this particular video, and there's a segment in there that kind of talk about GameStop, and I think it's worth correcting because this is the narrative that is being pushed. And as you know, look, it happens when Bro and Kitty kind of tweet about it a couple of days ago, right? I think that's the date in which he was tweeting. So, of course, people have their 2 cents in, but I think, certain things that I feel like he got it wrong. But before I do that, let me do this real quick, okay? Because I feel like I need to address this. Look at this ask. $5,000 per share. This is on IEX. It's pretty hilarious to me because, hey, nobody is willing to sell only if it's that high. So again, the price discrepancy or the spread is so high at the moment. But look at the option chain at the moment. The max pain is 27.50. So be careful. It might go down to that point by the end of this week. Because again, hey, this is the equilibrium part of market maker strategy, not to lose money. Just be aware of that. Next week is 25. It doesn't mean that it's going to go down to that, but it's likely to go down to that if people are not adding to their position, whether it's call option or whatever, right? Understand the dynamic between the call options and put option. And then whatever the equilibrium is, that's where the max pain is. Keep in mind, max pain is delivering the most pain to retail investor. Okay, people who betting, the call size and the put side. Okay, so just be aware of that. Now, the most popular chain is this particular one, January 17. Because look at this massive amount of bets going on here on the call option. This is call that are out of the money. Puts at the current state, at the current price point, it's only 8,000 contract versus 84,000 contract of call option is in the money. So look out for Gamma Ram. Look at the max pain for this particular, way above it, right? Will it sustain? That's remain to be seen. We will see. If we reach $30, this is gonna go out into the money. 32,000 call option. Is it? Yep. Open interest is going to be in the money, and of course, hey, if people were to exercise that, that's going to convert to share. Again, for the Gamma Ram to happen, people would have to exercise that and then convert it to share. Again, not advocating for you guys to do that. I'm just saying that that's the only way for Gamma Ram to happen. But yeah, again, if the sentiment of the company is now bullish because the earnings was very good, again, when I said very good, I feel like people are like, oh no, they're not doing anything better than they used to. They're doing the same thing. It's like, well, I mean, just hold your horses, wait. 3 years ago, you thought that this company was going under, right? Bankruptcy. You wouldn't be talking about GameStop 3, 4, 5 years later. That's what they're saying, right? And so even at this junction, there's some analysts out there who are saying that GameStop is going to go bankrupt in 4 or 5 years, which is stupid. Charles Schwab, whatever network is saying there's a better possibility that Jimmy's going to go to zero than keep on the what? It makes no sense to me. But anyway, I'm just saying, just hold your horses, and then I don't know, come corrected. I'm sure you're going to be talking about this company for a long time, for the rest of your life. Okay, Michael Pachter. I don't know how long you're going to have to live, but I'm just saying, 50 years of your life, you're going to be talking about GameStop after. When you're 100 years old, you're going to talk about GameStop. When you're 150, you're going to talk about GameStop. You see what I mean? But anyway, catch my drift. Just kidding. But anyway, so think about it, right? But anyway, so let me exchange volume. Look at this. Off exchange is more than 50%. Again, like it used to be. Hold on, let me see if I. No, I can't. What's happening over here? I used to have a better overview. Maybe that's the one. Short volume, perhaps. I don't know what I was looking for. Okay, I think I use. Okay, so today, 14 million shares, nothing at all, right? Okay, I mean, off exchange, at least it's a little bit less, but okay, at least it's not 50% off exchange. It used to be like 60%, 50%, 70% off exchange. So now it's more on the lit market. Yeah, look, I don't know. Again, the price action makes no sense to me, because if you were to look at this particular one right here, see, makes no sense. Makes no sense. Retail don't get to participate this on this particular candle right here, in Robinhood or even Weibo right there. If you were to kind of check them right now, it has no rhyme or reason why it just skyrocketed and then dropped back immediately. Makes no sense, right? Free market, think not. Anyway, so let's get back to this video right here. I know I clicked on it because it has something to do with advising women and finance, and just so happened with this gentleman to talk about GameStop, and I think he got some good points, some bad points, and again, most of the time is incorrect, because I feel like that's the narrative that the media wants everyone who didn't know anything about GameStop in the early on, in its history, okay, of this speculative bubbles here, okay. So let's listen to it, and I'll come back. I'll stop in the middle and then we'll discuss it.
But what Wall Street does a great job of doing is finding ways to increase the value of a stock without the company changing anything about it. It's some creative mathematics, if you will. So ultimately, let me bring this back to say, yes, I understand that there is a lot of skepticism about the financial markets, and skepticism that you aren't being played, that the system isn't rigged. Ultimately, I like to be optimistic. I think that there is still opportunity within the stock market. Obviously, yes, I know that sounds self-serving. Me being a financial advisor, I would want to be optimistic about it. But I truly do believe that while, yes, there is some cronyism going on, the free market still reigns. And I think the biggest thing is to just not buy into a lot of the speculative craze that can go on. We're seeing it right now, or at least we've seen it in the last couple of years, the GameStop craze that happened in the early 2020s. GameStop.
I agree. Like free market reigns supreme, right? As we saw in the trading of GameStop in the last couple hours, and a couple hours, the whole 3 years of GameStop history. But the point that I'm trying to make here is that this gentleman, I know he has good intention. He's a financial advisor and all that stuff. I graded. Yeah, I'm sure he has degree to back that up. But the thing is, like, he talking about GameStop in the lens of Wall Street type, while criticizing Wall Street himself. And again, perhaps this is the narrative that he only privy to. So, I wouldn't fault him for that, because again, when you read the headlines about GameStop, this is what you get. So let's kind of continue to listen, and I'll point out a little bit more.
Wasn't even doing anything differently with his business model. You just had a bunch of people on Reddit who found out that these hedge funds had a massive short position on GameStop. So they were driving the stock price of GameStop up, so that way they could squeeze, if you will, the hedge funds and make them hurt. It was kind of
this is where it was incorrect, right? He was saying that the GameStop craze came from the fact that people just found out this company has a high interest, short interest, and it didn't do anything different with the business model. That is incorrect, sir. So let me try to kind of fill in a little bit here. Now, I know everybody knows who Keith Gill is. Let's not start there. Let's start with the company itself, okay? The reason why people feel optimistic about this company when it was in its demise was not because of Roaring Kitty. No, it was because Scion Capital, which is Michael Burry at the time, was the one who bought in early on, okay? And that's what Roaring Kitty was observing, as a person who nobody knows who Roaring Kitty was, okay? Before all of this, okay? Now, he was a scapegoat for the media to bring this narrative up for the people, and without knowing anything about the company. So let's focus on the company itself. Scion Capital took a position and then publicly criticizing the board of director, saying, hey, you're not doing anything much. Look, your shares shorted to oblivion, right? And it was even told early on. I don't know at what point was Scion Capital, Michael Burry, took, I guess, a position in GameStop at the time, but they did sell out when it ran. The point is that that was a cornerstone, right? And then another cornerstone, another critical point that this gentleman missed is Ryan Cohen come in, wrote the letter to the board of director, which everybody should go and check out, who's still unclear about what happened. When Ryan Cohen got in, that's the catalyst that people was like, hey, there's a change in leadership. So that's fundamentally what was changed about GameStop. That's why people bought in. Now, the icing on the cake was the short interest. Correct. That's correct. But the icing on the cake was that, not the fact that the whole ingredient comes from Roaring Kitty and then try to spike the price up. That's BS. That comes later. Okay, that comes later. So without Ryan Cohen changing the board of director, coming in, sitting on the board himself, buying in 10% of the company, with the intent of fundamentally change this company. Now, the company was rotten to the core. Okay, that is why it takes him this long, him and the leadership, this long to sort it out. And again, no credit is given for Ryan Cohen and the leadership that have been doing the right thing. But the only credit that it's attributed to this company was because of Roaring Kitty. Now Roaring Kitty has its own flair to come out, but again, that's what this particular video is missing. Big time.
The little man taking it to Goliath. And ultimately they did. These hedge funds lost a lot of money. But there was nothing that inherently changed in GameStop's operation. It was just a big psychological thing that happened. And I think we're seeing a lot of that now with the AI boom. Yes.
AI? Yes, I agree with that one. But again, the whole GameStop craze thing, it's, again, still misunderstood by most people. I'm sure he's just going to go on with the other bubbles and all that stuff. And I'm not going to kind of address that. But again, I'm sure he has good intention, but the storyline is missing here. Of course, I know what GameStop is. Hopefully, whoever watching this video come across it for the first time, I encourage you to check Moran's rants out. He is the most informed, the most true to his, analysis about GameStop, the best one in the internet world when it comes to talking about GameStop the right way, correct way, and how you should approach investing in this type of company. Because again, this type of company is what's called a successful turnaround company. And again, people in the media is trying to undermine the success of this company for a long time, ever since Ryan Cohen got in. Again, just look at the documentary about him being in a cultist or whatever, right? A cult leader of some sort. It's like he's just trying to operate a company the best way he know how. And he using his talent as an incredible investor, number one. Number two, an incredible person of success previously through Chewy. I know, I don't care how people think that Chewy is not profitable. What are you talking about? He built it from the ground up and he sold it for $3 billion. $3.3 billion. Okay, so that is a definition of success to me. In 7 years, by the way. Under 40 years old. So, give me a break. To say that this man is not successful is stupid. Stupid. But anyway, I'm just saying, very frustrating when people are talking about Ryan Cohen as if he's not, doing the right thing here. And all he's been doing is the right thing. Look, when he took over GameStop, he bought GameStop with his own money, sit on the board, denied any kind of rewards that comes after that as a chairman, right? Because he was like, hey, the company did not make money, so any executive who comes in should not make money off of shareholder either. Okay, so that's admirable. It should be rewarded, but for some reason, he's being villainized. Meantime, people promoting, people like Adam Aarons, for example. You see how, like, this discrepancy of how, good CEO is demonized, terrible CEO is elevated. Why is Adam Aarons still a CEO? Burning billions of dollars over the decades in which he was in AMC and still elevated. Oh my God, this guy is such a great CEO. The reason why Ryan Cohen and GameStop is demonized is because he's doing it differently. He's not beholden to Wall Street. That's why. Okay? So just observe, if you don't believe any of this, just observe it. You don't have to participate in buying a share or anything like that. Just observe how are the media talking about GameStop as if it's, just a blips in people's imagination. People who are investing in this are a cult or in a cult. Okay, well, what is so wrong about investing in a company for the success of the company and not betting against it so that it's the, making money off of the demise of the company? See what I mean? And so again, let's cut the bull crap here. But anyway, so until people could explain what is going on here, then I would be like, okay, the market is fair. But for now, market is still doing its shenanigans here to try to cover up what they're doing to this particular company and the rest of the company and the S&P 500 as well. But anyway, so I encourage people to subscribe to him. He only kind of, I guess, started. Seems like a nice gentleman here, but I think he's wrong about GameStop here. Big time. Anyway, I'm gonna just end here. I don't know why I'm like out of breath for some reason. But I just want to come here, kind of, say hi and make a little bit more video here.